Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive in, take a look, see what's going on today. If you want to follow me at @Finance, and if you want to join our community, finding-value.com, I dive into all these topics, sectors, looking for investment opportunities. I am continually refining my process. I'm getting a lot more picky on entry points and companies, really trying to focus on the things that I've learned and leverage those experiences that I've experienced over the past 20 years of investing and really applying the knowledge that I'm learning, developing, and refining as I go. If you guys are interested in this journey, definitely sign up. You can go and use coupon code SPECIAL. You can get savings on both the monthly membership, which is just for the first month. It's $25. And then you can sign up to the yearly membership if you'd like. It's a $500 charge for the entire year. And you can follow exactly what I do. You can see what I buy, when I buy it, how much I paid for it. I'm sharing my Roth 401k completely. I mean, I am completely exposed. You can see all the purchases in there. There is a limit, so I can't put in an infinite amount of money in it, but you can see where I'm taking positions, why I'm buying things. You can come during the weekends on the Q&A sessions and ask me directly. You can get ask me whatever you like. And then midweek updates is where I let you know what I think is the best setups that I'm looking at and what I'm doing with my money. First one, Charlie Munger. Warren and I never tried to make money out of the stupidity of dumb buyers. We tried to make money by buying. I think it's better to go through life our way instead of theirs. What does he mean by that? So they didn't play the greater fool theory. They didn't try to buy something that's in favor, hoping that other people would be as irrational as maybe they are, hoping for higher prices. What they do is they wait for opportunities. They sit patiently, they wait for the market to digest some sort of fear. And then they pounce on the opportunity when people are fearful. So the way that they make their money isn't by having others chase into it and sell it to a higher price, aka the stupidity of dumb buyers. What they do is they make their money on the purchase and they wait for the right opportunity where people get afraid. Call it a certain market condition. So a market condition comes, a liquidity event, a recession, where people get scared. And then they create the value opportunity in the market where they sell asset prices down. The financial metrics all become cheap. Price to book, price to earnings, price to sales. It doesn't matter what financial metric you use. And then they pounce on it because they know that that condition can't last forever. We can apply that to what we do as investors. And the hardest part is you have to do opposite of everyone else. It's going to make you feel alone. It's going to make you feel vulnerable because now you're going to have to make your own decisions. Most people just want to fit in. They want to slide into that herd and just not be seen. But vulnerability exists when you step out of the herd, and you're going to have to think. Once you see the herd and how the herd behaves, and you step out of it and look back at it, that is when you will realize how to make money. That's what I'll say. Howard Marks says the relationship between price and value holds the ultimate key to investment success. Buying below value is the most dependable route to profit. So let's break this down. I want to break this down because I don't know if people understand it. You read these quotes and it's like, well, what does that mean? Let me like break this down for you guys. If you always buy way below the value of an asset, it does a few things. One, it does what Charlie's doing. What happens is you're waiting for an asset to sell off to create that gap between price and value. That's your quote, AKA margin of safety. And only under certain market conditions will that gap exist. What this also does is it always keeps you in the cycle, at the bottom of the cycle. Because if only you buy undervalued assets, it keeps you at the bottom of the cycle where that margin of safety is. The problem that people have that is instinctual inside of them is that they want to go run and chase price. They want to go chase the shiny object. They want to go see the loud noise. They want to go see what the bright flash is all about. If you buy undervaluation and you are patient, you are always at the bottom of the cycle. It always keeps you safe. And that's what I think he means by buying below value is the most dependable route to profit. But that doesn't mean it's easy. It doesn't mean that you're just going to go straight up. You still need a bunch of, I'll call it training. And it's not just conviction, because your inner innate being is going to fight you the entire way. So yes, we know this is undervalued. Yes, we know that we need to be patient. And yes, we know that we will experience pullbacks along its way to fair value and overvaluation eventually. But it's not an easy ride. You have to have emotional fortitude, I'll call it, constraint, discipline. And people would say, oh, Andy, it's easy for you to hold on because you're up. You know, a lot of my positions, when I put them on in the beginning, I see a negative value in the beginning. I don't time my purchases absolutely perfect. And when you try to buy close to bottoms, you're going to get volatility. And sometimes it's not going to go up very quickly. Sometimes it does. So you're still going to have that emotional, I don't know, the it's not conviction. I mean, people say it's conviction, and yes, conviction matters, but you still need to be able to take the gut punches. You still need to be able to do that. And I don't think it's just conviction. I think it's deeper than that. I think you have to have this kind of, how can I say it's not like you kind of have to let that money go, if that makes sense. You have to let that money do its thing. If you know how valuable money is, like you just earned it and you want to grip onto it, and you're so afraid of losses, I don't think you can have that mindset. I think you have to be a mindset of the future is going to be bigger, it's going to be better, and I want to have exposure to this bigger and better future in this sector, so to speak. I think that has to happen, and it is conviction in some degree, but it's also the ability to take gut punches. Total reversal from HFI research. So they call this crude oil production tracking. It's not crude oil though. I'll explain. So this is definition of a temporary run-up. October U.S. crude oil production data set just finished. And implied U.S. crude oil production is back to 13.5 million barrels. So we have this big spike. Now this spike, if you guys want to know, it's got natural gas in it. They changed the way that they track this stuff. They're trying to hide that we have a problem in oil. So then they throw a bunch of natural gas liquids and all this other crap in there. But yes, it went up. Yes, it came back down rapidly. We just have to be patient here. We are shedding rigs. We're shedding frac. And I think the with time, we're going to see this roll over like it is, like it is. Robert Greene says, above all else, focus on acquiring knowledge and skills. Knowledge and skills are like gold, a currency you will transform into something more valuable than you can imagine, says Robert Greene. And, you know, I would go to work at a 9 to 5 job, and I'd always have these people around me, and they would always talk about the skills that they wanted to develop. Oh, I want to learn Excel. Oh, I want to do programming in Excel and chop this data up a certain way. And I want to learn all these systems, ERP systems, MRP systems, material resource planning is what that means, or electronic resource planning. And they kept wanting to learn all these systems. And I was just sitting there. I'm like, why do you want to learn all this? None of the people that are way up, higher up, they don't know any of this. I think what matters is you want to acquire the skills that add a lot of value. It's not just collecting a bunch of skill sets or skills. And skills are important, but there are certain skills that are far more valuable than other skills. And I think that's what people need to focus on. It's not about learning how to program in Excel necessarily. I mean, maybe it is for some people, but you got to focus on what you want to do, what you enjoy, and also, in my opinion, what will make you money. If it doesn't make you money, acquiring all those skills might just be a waste of time. I acquired a bunch of things when I was at work, and I don't think it was a complete waste of time on some of them. I don't think I really got paid for it to some degree. And yes, there are things I could have done differently for sure to do some certain things, but it's I think I think you really have to, how can I say it? It's a very political game. I'll just say that. Very political. Acquire the skills that have value and make sure that, let's just say, your dollars per hour continues to increase. You're becoming more valuable and you're getting paid for such value. I see a lot of people, they go up the ranks. They used to work a 40-hour job, 40-hour per week job. They're getting paid, I'll just make up a number, $60,000. Now they're getting paid 80 or 90,000, but now they're working 60 hours a week. Tell me the trade-off there. Was it worth it? To me, I don't think so. Here's Uselink. We just witnessed that breakdown for Bitcoin. Just like Amazon did before we had a total cleanse, I thought this was an interesting fractal comparison. Fractals are just patterns. We got the up move, and this is 1998, 99, 2000, 2001, and Amazon is in the white. Bitcoin is in the yellow here. Does this fractal look pretty similar? I think it does. I think it looks almost exactly the same. Good catch here. Are we going to get a big move lower from 2000 to 2001? Is that kind of where we're located? I don't know. We could. If we see U.S. construction employment roll over, we could see something like that occur. Now, a lot of people, they're going to be worried. Oh, well, what does that mean for commodities? What does it mean for gold and silver? I think gold and silver are going to continue to go up if this were to play out. Some of the commodities, I think they could go up too, depending on how much inflation we have. We could see some days where things all correlate together, depending on how fast things sell off. So get ready for volatility, is what that means. But I'm kind of expecting this to occur. I've been in the rollover camp for a couple of years now. Well, probably more than a couple of years, probably 2, 3 years. I've been looking for a rollover in the markets and it hasn't occurred yet. Doesn't mean I'm wrong. And some people say, well, it's wrong to be early. No, it's not. It's completely right. Go back to what Howard Marks says up at the top. Let's go back and read it real quick, right? The relationship between price and value holds the ultimate key to investment success. If the value isn't in technology stocks, I'm not going to be there. So where am I not? I'm not in technology stocks. And if the value is over in commodities and precious metals, well, that's where I'm going to reside, if that makes sense. Freight futures AM update. Dry bulk, Capesize up 2%, Panamax up 3%, tankers are flat. You know, a lot of people worried about the short-term market movements. Take advantage of that. People get scared. Take advantage of it. Breaking. Treasury Secretary Bessent urges buying Bitcoin as it's backed with the full faith and credit of the USA government. When you buy Bitcoin, you help America. What the? What is that? I don't want to touch that with your money. Come on. It says you'll enjoy this one. Copper production and population growth. Look at copper production going vertical since 1950, 60, all the way up. How sustainable is that move, you think? How sustainable is that move? You think we're going to do that for the rest of my life? I don't know. We'll see. We need a lot more copper. All solutions. So if we have an energy problem, all solutions are electricity based, it seems like. Electric vehicles, electricity. AI data centers, electricity. The grid needs massive upgrades. Everything that we are going to do in the future is pretty much electrical based solutions. So, how can I partake in investing in electrical based solutions? Well, copper is one of them. We have copper. There's other materials that go into electric vehicles that I think will be short. And I'm looking at investments in all of these areas. I think that energy will be a huge cornerstone of my portfolio, that theme. And if I can buy these things when they're way underpriced, undervalued, well, that doesn't seem like much downside with a whole bunch of upside. That's the way I view it. Another one from Howard Marks. It's much easier to make money when the world is depressed because when it stops being depressed, it's like a compressed spring that comes back. Well, that's fear. Depression, fear, it's all the same thing. Charlie's taken that. It says if you're emotional about investing, you're not going to do well. And that's your response to market price movements. If you're emotional, if you get really, really high when it goes up and you get really, really low when it goes down, and you take action on those emotions, yeah, you're not going to do well. You need to be rock solid emotionally. You need to be well put together. You can't be a little baby. You can't be a 3-year-old kid who's jumping on 2 feet or smacks his body on the ground, crying when things don't go his way. You have to be disciplined. You have to just sit there and say, tomorrow will be a better day. S&P versus the gold price. We're in this big channel or megaphone pattern, I should say, and we're rolling over. I agree with where he thinks it's going. I think gold's going to outperform. We could see a rollover in Bitcoin, a rollover in NASDAQ, or a sideways chopping action as gold goes higher. Totally agree. OPEC plus pauses, but is it enough? I don't know. We see all these big things with exports. We'll see where it goes. That's what we'll say. We'll see if it shows up on land. And again, oil on water keeps rising. A growing share of the world's oil on water now comes from sanctioned barrels. Russia, Iranian, Venezuelan crude struggling to find safe buyers or financing. The data is noisy, yes. The one trend is clear. Floating storage keeps climbing. More sanctioned oil is circling the seas instead of hitting refineries. And as those barrels eventually make landfall, onshore inventories will rise. The build may not be explosive, but it's real and it's quietly reshaping how the market measures supply. Watch the tankers. They always tell the truth first. So here it is coming on up. So we should see builds at some point here in some of the inventory levels. It says China is running it hot too, bullish oil. Well, they just went through a recession in their real estate market, in the real estate cycle. They're going through a recovery phase. And during a recovery phase, what they do at the beginning of them is they print a bunch of money. They do stimulus. So translation, the Chinese central bank has effectively resumed quantitative easing. While the scale of the net purchase may not be significant yet, the policy shift itself is highly meaningful. Despite the volatility today, developments like this are precisely the kind of signals that reinforce conviction in the long-term thesis for hard assets. Monthly net purchase of government bonds going up. Well, yeah, that's where they're at in their cycle, and we're seeing a strengthening in steel, iron ore, all these different materials. So yes, I think it's going to have an impact on hard assets. And that's all I've got for today, guys. So we'll end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you like. Specials with the coupon code. And that's all I've got for today. So we'll catch you next time, guys. See ya.